Sorry students for a bit of this delay. Was held up in the procedural things and all because the lectures are very back to back. So students, now in this regard, let's look about the, have you seen through this question number 455? 455 students, question has been seen by all of you. Do ensure to go through this question, students. That is an important particular part. Okay. Nevertheless, now students, I'll go to the next question. Safe harbor rule. Students, please tell me, I have already done safe harbor rules. Have you all seen this video or not of safe harbor rules, which was done in English? Safe harbor rule video, have you all seen it in English or not? Quickly students, praising. Prem, just do ensure to see this particular video because these are the important particular lectures which are being there. And in that particular video itself, students, I have done the practical question also. So my suggestion to all of you would be, don't do safe harbor rule in isolation. Do safe harbor rule along with what students? Same question we have did, along with the concept part. So in that case, students, please do ensure. In fact, that video was day before yesterday. Day before yesterday itself I did it. Isn't it? So students, without fail, it has to be done. With that now, students, we come to the APA part. Students, the APA part. Again, one of the most important particular area so far as the coverage is concerned. In the APA, students, which you can see over here. Rollback period and the impact of the rollback assessment. Now, obviously, students, in the APA, as you all are aware, there are certain conditions. The general philosophy of APA is what? You take the APA for the 5 years, 5 future years. Now, that APA could be either for the price itself, or if not the price, at least the manner in which the ALP would be determined. So, one of the two primary is freezed by both the SSC as well as the department together. So, they sit together and they do freeze these two particular aspects. Now, this APA, students, as you all are aware, it is applicable for a period of 5 years. Now, if in the past similar transaction has been carried out for which no APA was taken earlier, then in that case, the APA that you have taken up now, can you get the benefit of rollback? Can you get the benefit of rollback, students? Deepak? Whether the benefit of rollback facility is available or not, students? Quickly! To that the answer is yes. The benefit of the rollback facility, students, is very much available. Now the rollback, as you all are aware, is for a period of last 4 years. Pray. Last 4 years that the benefit of rollback facility is available. I hope that all of you are clear with this one. So therefore, this is all the things has to be considered over here. Now, students, all the conditions which are being there are majorly for the rollback scheme only. Majorly, the conditions which are being given to you is the rollback particular conditions. Now, this question is also going to test some of them. Let's see, therefore, those conditions. So, those conditions will do it through this particular practical question of your examination. Question number 457, students. Let's start. DIY Limited, a company registered in India and subsidiary of CD and C. A company registered in Austria. DIY Limited engaged in the manufacturing of fabric. So students, by virtue of this, all of you can see, being a subsidiary company, both of them are associated enterprise. To arrive at the arm's length price applicable to its transaction with CD and C. DIY Limited enters into an advance pricing agreement with the board on 25th of November 2021. So students, what is the date when the APA was being entered? The date when the APA was being entered was 25th November 2021. Accordingly, there will be a substantial change in the income of DIY Limited. Also, DIY Limited wishes to apply for the rollback provision to the previous year 17, 18, 18, 19, 19, 20 and 2021. So these are the last 4 years for which they want to go for the rollback facility. The AO wants to apply, students, the AO wants to apply such transfer pricing provision from the year in which DIY Limited became a subsidiary of CD and CDOT, that is 13-14. Can the AO roll back, students, can the AO roll back from 13-14? That is the year in which they became the subsidiary. From that very year, that is AY 13-14, can the rollback provision, can it be made effective? What is your take, students, in this case? Whether the rollback provision, can that be made effective in this particular case, students? To that the answer is obviously no. And the reason is very clear, students. The reason is very clear, that you can take up the rollback benefit only for the last 4 previous year. So the last 4 previous year only you can take up the benefit. So therefore, what the SSC application for rollback starting from previous year 17, 18, 18, 19, 19, 20 and 2021 is that particular 4 previous year application valid application? Yes. But can a rollback can be taken beyond previous year 17, 18? Can the rollback be taken beyond previous year 17, 18? To that the answer is no. Now DIY Limited, students, had filed its return of income for the assessment year 21-22 on 26 August 2021 and for assessment year 22-23 on 31st August 2022. The assessment for the assessment years 2018-2019 to 2021-22 are completed, but the assessment of AY 22-23 is pending on the date of entering into APA, students. So if you all will see over here, in this context, so return, students, they are talking about it, had filed its ROI for AY 21-22 on 26th of August 2021 and for AY 22-23 on 31st of August 2022. The assessment for AYs 18-19 to AY 21-22 are completed. This is important, students. Why? Because after the rollback is filed, after, see what happens with, I think for rollback, one of the condition, I think when you should be aware, students, one condition is for, are you aware of that condition? Modified return. For that rollback period, the SSC will be required to file a modified return. Are you aware of that condition or not, students? So therefore, this has to be filed. This particular, students, has to be filed in this context. So therefore, in this regard, we will say that the SSC will have to file, the SSC students will they have to file, students, the modified return? And the answer is yes. Once the modified return is filed, students, thereafter on the completed assessment, tell me what the AO is going to do. Once the modified return is filed for the AYs for which the assessment is completed, what the AO is going to do? Will the AO is going to reassess? Will the AO, students, November 24 or November 23, Rumil? If it is November 24th, Rumil, same time next year. For DT, I'm talking about it. Only for DT, if you're talking about it, same time next year. for November 24. Okay. Now students, if you see for the completed assessment, I'm now talking about students the completed assessment. So if supposingly the completed assessment, what I was talking about it students was that when you file a modified return and your assessment is already completed, when you file the modified return and your assessment students is already completed, please tell me then, are you then going to do a reassessment? Because the modified return has been filed, are you going to do a reassessment in this regard? To that the answer is no. You don't do reassessment students in this regard. I think all of you have got hold with this one. So you don't do a reassessment students in this regard. No such reassessment has to be undertaken. Be very careful on that students. You don't do the reassessment students in this regard. Are you getting this one students? All of you. So therefore, what we are going to say, in such particular cases, no reassessment shall be undertaken, which implies therefore that students, if no reassessment has to be undertaken, what needs to only be done is that on the completed assessment, once the SSC files the modified return, the AO also needs to only modify the order. Students, what the AO will do in that case? The AO also will only modify the order. That is the limited purpose of the activity which the AO has to undertake. That is the limited purpose of the activity which the AO has to undertake. No problem, not in this case. Only modify, because the assessment is already completed. So he has got no right to assess or reassess and the income for those assessment for those assessment year for which the assessment is completed. But what about the assessment for 22-23? So far as the assessment for 22-23 is concerned, they have said that it is pending on the date of entering into the APA. And if it is pending, students, on the date of entering into the APA, now you tell me, after the SSC would have filed the modified return, whether the reassessment or the recomputation, can that be undertaken in this regard? Can you do the reassessment or recomputation in this regard? To that the answer is yes. So for pending assessment, you are allowed to go with the reassessment or recomputation, but in the case where the assessment is already completed, thereafter you don't do a reassessment, but what you do, you only simply modify the order. You simply modify the order. Yes, there's a time limit increment also which is available, which I'll just try to do with this, but this is what it is. So students, question, if you see whether the AO is correct to apply the transfer pricing provision from AY 13-14, no. The rollback provision is only for the last 4 years period. In respect of AY 19-20, the transfer price arrived at by the board is resulting in reduction in the income of the SSC. Students, I think all of you are aware that if the APA, which you want to roll it back, if that rollback results into either reduction in the total income or the increase in the loss when compared with what was declared by the SSC in his own ROI, then in that particular case, the conclusion that we have drawn upon is that the transfer pricing provision will be dropped. The transfer pricing provision will be dropped, students. Is that the conclusion that we have drawn upon? And the answer is yes. So that was the conclusion, students, that we have drawn upon. I hope that all of you are clear with this one. And that exactly is the point, students. That exactly is the point. So I hope that all of you are clear with this proposition. Every one of you. Fine, students. Shall we proceed now, students, in this case? With your permission. Shall we proceed, students? Let's start. So now, students, if you see, so here, if the rollback of the APA results into the reduction of what, students? Reduction in the total income, students. The reduction in the total income as declared by the SSC in his ROI when compared with what the SSC has declared in the ROI, then in that particular case we will say that such reduction, students, that such reduction which is there will be such reduction, students, in this particular case, which is being there over here, will not be accepted, and accordingly the APA will not be allowed to be rolled back for that particular assessment year. The APA will not be allowed to be rolled back for that particular assessment year. So I hope that all of you are clear with this one. Students, time limit I will not touch upon to this right now, because in any case our next particular topic itself is assessment procedure. So I'm not touching upon the time limit right now, because obviously the next topic, assessment only, I'll try to touch upon to these things. Same is also with penalties. Penalties also I'll not touch it right now, because in the next particular topic, assessment and penalties, I'll use those particular assessment procedure area and the penalties area, which we will cover it up when we do those particular topic. Okay. Yeah, only for such financial year, only for that financial year where there is an impact of reduction of the total income, only for that financial year the rollback will not be applicable. For the remaining financial year, if there is no reduction in the total income, then definitely you will be in a position to do the rollback. But please be careful, if out of the four particular year, out of the four preceding previous year, if say for example one of the year get disqualified because the condition is not getting satisfied, then that does not mean that you will then get extra one more year so as to make it 4. You don't do that way. If one of the year gets disqualified, then out of 4 now it will become 3. So therefore this is how it has to be considered. Just keep that particular point in mind. Now student, section 94B, question number 460 is in respect of thin capitalization. Very important area. Now, so far as thin capitalization, students, is concerned, you all are aware that where the loan is given by the non-resident associated enterprise to the Indian AE, point number 1, or where the loan has been given by whom, students? So first is by the non-resident. The loan has been given by the non-resident AE to the Indian AE. That is one. Or second is where the loan is although given by third party to the Indian AE. Third party means an unrelated party to an Indian AE, but that loan is guaranteed by the non-resident AE. That loan is guaranteed by the non-resident AE. Then if the interest that is paid, the amount of interest which has been paid by the Indian entity to the non-resident AE or to the third party where the loan is guaranteed, then the interest paid, if it exceeds rupees 1 crore, the interest paid if it exceeds rupees 1 crore, then the provision of section 94B will be applicable, and the provision of 94B says that the interest expenditure will then be compared with, the interest expenditure, students, will then be compared with 30% of EBITDA. That interest expenditure which you have paid to whom, students? That interest expenditure that you have paid to your non-resident AE, that interest expenditure that you have paid to your non-resident AE will be compared with 30% of EBITDA, and thereafter, students, what we are going to say? We are going to say that such particular expenditure so paid will be disallowed. Such particular expenditure, which expenditure? The excess, not the entire amount. Students, the excess expenditure of interest which is over and above 30% of EBITDA, will that be disallowed? And the answer is yes. Now, will it be disallowed like forever? No, it is not disallowed forever. What happens is that whatever is disallowed in the current year, that portion of disallowance will be added to the next year interest expenditure. It is added to the next year interest expenditure, and then the combined amount of the disallowance of the earlier year plus the current year interest expenditure, that combined amount will then be compared with 30% of EBITDA of the next year. 30% of EBITDA of the next year. That exactly how the calculation has to be done. Is that clear to all of you, students? So this is all the things has to be looked upon. With that now, students, let's have a look. All of you will read the question, students, quickly. So students, go through this one. Prem, Deepak, praising. So in that particular case, students, if you all will see, here the entire point is that first of all you have to establish in this particular question with 1st April 2021 has borrowed rupees 100 crore from Mrs. A and C dot, a company incorporated in US at an interest rate of 9% per annum. The said loan is repayable over a period of 10 years. So students, here the rate of interest is 9%. So accordingly, what happens? How much is the interest that you have paid? The amount of interest that you have paid is how much? 9 crores. Now further, the loan is guaranteed by B and C dot incorporated in USA. K and C dot, now guarantee, this is a case of a guarantee, students. K and C dot, a non-resident holds shares carrying 30%, 30% of voting power both in Mrs. X Limited and Mrs. B and C dot. Mrs. K and C dot has also deposited rupees 100 crores with Mrs. A and C dot. So can you see that, students, over here in this case? So what they are mentioning is that Mrs. in this context, students, this is a beautiful question wherein the two entities, please understand, students, here X Limited and B Limited are not directly related with each other. X Limited and B Limited or B and C dot are not related with each other. But K and C dot, students, K and C dot, students, which is there, that K and C dot is holding in both these entity 30% of the voting power. Now the moment you hold 30% of the voting power in both the entity, in that particular case, both of them will then be considered to be an associated enterprise. Both of them will then be considered to be what? As an associated enterprise, students. Do you all get this one? So therefore, both of them in this regard, students, will be considered to be an AE. Now, one thing you should understand, although both of them are AE, X Limited has taken the loan from another entity, A and C dot. Now, this is an unrelated party, but this loan has been guaranteed by whom? This loan has been guaranteed by B and C dot. See the kind of the web which is put across. So therefore, in that case, and to make both X Limited and B and C dot as a associated enterprise, to make X Limited and B and C dot as an associated enterprise, Mrs. K and C dot, which you can see, Mrs. K and C dot, students, is the one which is holding the shares, or which is holding the shares carrying 30% of voting power in both X Limited as well as B and C dot. Is holding 30% of voting power in both X and C dot, X Limited and B and C dot, students. I hope that all of you are clear with this one now. So therefore, we can say that since the loan which is given by an unrelated party has been guaranteed by the non-resident AE, which is Mrs. B and C dot, therefore what? Both of them will be considered as an associated enterprise. In that particular case, students, both of them will be considered to be an associated enterprise. Now, what do I mean by both of them in this context? X Limited and B and C dot. Yes, even K and C dot is there, but we are not interested in K and C dot in this regard. Other information. In the other information, net profit of X Limited was rupees 10 crores. The Indian AE which has taken the loan, is 10 crores after debiting the above interest. So EBITDA means what? Interest before earning before interest, tax, depreciation and amortization. So therefore 10 crores plus the interest of 9 crores plus the depreciation of 5 crores plus the income tax of 3.4 crores. Can you tell me the total of this? So the total of this, students, in this context is 27.4 crores. 27.4 crores, students. And you take 30% of that. You take 30% of that. So 30% of 27 is how much, students? Quickly! It is some 8 point something something. 8 point something something. How much is that for? So students, in this particular context, it is 8.22. 8.22. So therefore, now you have to compare what? This is 30% of EBITDA. So 30% of EBITDA is 8.22 crores versus the actual interest that you have paid is 9 crores. So what would be allowed is 8.22 crores, and therefore how much would be disallowed would be the excess amount, which is, how much is the excess amount, students, in this particular case? 0.78. Now this 0.78 that you can see will not be disallowed forever, but this 0.78 will be added to the next year amount of the interest that you have paid of 9 crores. 9 crores or whatever be the amount of interest that will emerge. So that is what you will be adding, this 0.78 crores, and then that combined amount will be then compared with 30% of EBITDA. I hope that all of you are clear with this one. So students, we are done with this particular part. Now there are some simple questions on the methods of determination of ARP. It's a quite simple question. Prem, tomorrow morning it is 6 o'clock. Be careful. 8 years. The lapse would be for 8 years. Now DS Limited, an Indian company, supplied the raw material to its holding company. Yes, right. To its holding company SSINC UK during the previous year 21-22 at rupees 350 per kg FOB. At rupees 350 per kg FOB. DS Limited, so this is the FOB value, students. How much is the FOB value? 350 rupees per kg, which is the FOB value. UK, the previous year which is there is 21-22. DS Limited also supplied the similar raw material to AB PLC, another non-resident who is unrelated party. So you can see for yourself that the Indian company is supplying to its AE, which is the holding company, at rupees 350 per kg, whereas the same Indian company is supplying the similar raw material to unrelated party at 600 per kg, but that is at CIF. Whereas the first case with the international transaction with the A, it is at FOB. So if it is at FOB and the unrelated party is at CIF, so that unrelated party will have to be brought down to FOB. Because I told you already that in that, whatever we do, we have to ensure that the factors which are there in the international transaction with the non-resident A, on the basis of same factor only the ALP has to be determined, and thereafter that ALP so determined will then be compared with the transfer price. Okay, so that is how it has to be considered. So CI, because the comparable is at CIF, the same has to be reduced. So how much would be reduced? The insurance and freight is 150 rupees. So outrightly reduce 150 out of 600. So that gives you 450. Further, DS Limited Further, DS Limited also provides warranty to AB INC dot for 1.5 months, students. So here, students, DS is doing what? They are also providing warranty to AB PLC. So therefore, the price which is charged to AB PLC is cum warranty, whereas the price which is charged by DS Limited to its non-resident A is ex warranty. Non-resident A, it is ex warranty. So the price which is charged to unrelated is cum warranty, whereas price which is charged to the associated enterprise, the non-resident A, it is at ex warranty. So what you will have to do, the comparable which is at cum warranty, that comparable you have to make it at ex warranty. And how do you do that? So they have given you also provides for to ABC for 1.5 months, whereas SSINC dot handles warranties by itself. So further, DS Limited also provides warranty to AB PLC for 1.5 months, whereas SSINC dot handles warranty by itself. And what is the cost of providing for warranty, students? Both SSINC dot and DS Limited provides extended warranty at 400 per annum. So per annum, if it is, then in that situation, you make it for 1.5 months, how much? Because the warranty is for 1.5 months. So therefore, in that particular context, you will do the prorata, and that much prorata of the amount will be reduced in the price of the comparable, and thereafter the ALP will be determined, and that ALP so determined will then be compared with 50, so as to see if there is any transfer pricing adjustment that is required to be made. So if you see over here, 600 insurance and freight, because it is at insurance and freight level, whereas we want it at the FOB level. So insurance and freight is reduced. Thereafter, cost of warranty included in the price charge to AB PLC. So cost of warranty included in the price which is charged to the AB PLC, students. And therefore, I told you already, you have to do it for 1.5 months. So 400 is for per annum. So how much is for 1.5 months? So therefore, this is the calculation which you have to do, and even that will be reduced so as to bring it down to the ALP, which is that 400. So 400 is the ALP, whereas what you are providing the goods to me would be at rupees 350. Isn't it? So therefore, you can easily see the difference, and that exactly the point, students. So students, this is how the things has to be looked upon. And now with that, we're done with this. Now students, one small question is there again on this particular part. So SSINC.UK holds 30% of capital of DS Limited, an Indian company. So outrightly they have become the associated enterprise. Isn't it? Thereafter, DS Limited has declared income of rupees 150 lakhs for previous year 21-22 before making any following transfer pricing adjustment. So already they have given you 150 lakhs, against which now you have to check out the transfer pricing adjustment. So that is what needs to be looked upon now. So thereafter, students, royalty of USD 12 lakhs was paid to SSINC dot for use of technical know-how. SSINC dot had provided similar know-how to another Indian company at $9 lakhs. So therefore, you are charging me more, whereas to others you are charging less amount of royalty. How much is the less? 3 lakhs. So accordingly, what I am going to do, that excess, the 3 lakhs which is there, will that be required to be added back in this context, students? The 3 lakhs which is there, what has to be done over this? So therefore it will be added back because your debit is 12. The Indian A debit is 12. Whereas how much debit it should have been? 9 lakhs. How much is the excess debit? 3 lakhs. And that exactly is the point. So add 3 lakhs. Let's see next one. But please understand, these are in US dollar. So you will have to do the conversion. Because it is at US dollar, so you can do the conversion later on also. Thereafter, students, loan of US dollar 500 lakhs carrying interest at 15% per annum was advanced by the Korean company XYNC dot. So that was advanced, students, by the Korean company XYNC dot. Total book value of assets of DS Limited is rupees 900 lakhs. PPA Limited has advanced similar loan to another Indian company. Students, PP Limited has advanced similar loan to another Indian company at 12% per annum. Now you tell me, in this case the loan has been at 500 and at 15% was given to me by the Korean company. Total book value of the asset of DS Limited is 900 lakhs, students. Remember that. PP Limited has advanced similar loan to another Indian company at 12% per annum, and the total interest paid is this much. So do you know how do you make the associated enterprise in this case? How do you make the associated enterprise in this case? So if the loan amount which has been paid, if the loan amount has been paid, students, and that loan amount exceed what, students? That loan amount exceed the book value of the total asset. The book value of the total asset. So if it exceeds the book value of the total asset, in that particular case, what happens, students? In that particular case, we will say what, students? In that particular case, with the loan of 500 lakhs against the book value of 900 lakhs, is the loan, is it greater than or equal to 51% of the total book value of the asset? The loan which has been advanced to this assessee, is the loan advanced to the assessee, is it greater than or equal to 51% of the total book value of the asset? And the answer is yes. So here actually you have to make the A relationship, 92A. So here they are targeting 92A beautifully, and 92A is established through loan which you have given advanced by the Korean company. So Korean company has given the loan of 500 lakhs, whereas Indian company total book value is how much? 900 lakhs. So is the loan proportion, students, is it more than 51%? In this context, answer is yes, and therefore XINC Korea and what? And DS Limited are A under section 92A. They are A under section 92A, students. Is that clear to all of you? Now, similar loan, students, is provided in an unrelated party transaction at 12% per annum. And therefore, if it is provided in an unrelated party transaction at 12% per annum, so therefore that excess interest which I am paying to my non-resident A of 3% per annum, that excess interest at 3% per annum would be added. So 3% of 500 USD. But you have to multiply, students, as it goes. You will have to multiply, students, in this case. So 500 in this context, and thereafter 3% of this. Fine, students. All of you. So we are done with this particular proposition as well in this regard, and that exactly is the point, students. Now, students, the balance particular question, students, I'll be dealing with in the next class, the cost plus method and all. So those I'll discuss it, students, in the next session. No, there's no rule for conversion here. Unlike in the case of non-resident taxation or the foreign tax credit rules that we have discussed, where there is a conversion factor that we have used, such conversion factor, students, is not there at all over here. So such conversion factor, students, is not there at all over here. Is that clear to all of you, students? So students, I'll see you then tomorrow. Just a very quick announcement. Tomorrow 6 a.m. in the morning, and that would be, as I told you, a marathon session wherein we will be stretching from 6 to 4. That would be the kind of lectureship that we are taking across for the tomorrow's class. 6 o'clock in the morning, tomorrow's class. Okay. So therefore now students, in this context, yes, 6 to 4. Tomorrow would be at 6 to 4. So tomorrow is a big day because tomorrow we will be completing transfer pricing and also assessment procedure as well. Students. Okay. Now students, one important announcement, as you all are aware. This is one of the most important announcements because tomorrow would be the last date, students. Tomorrow would be the last date, students, as you can see it over here. And therefore, with the 20% off on all the CA subscription, be it foundation, be it intermediate, be it final CA, at all the 3 levels, students, you will be getting a 20% off on all the 3 levels of the subscription. So 3 days, 27 June to 30th of June, that is the kind of timelines that we are looking at. And therefore, tomorrow is the last date. So you just need to, students, ensure, tell your friends, colleagues, juniors, everyone, that the referral code that they have to put up is CADS, so as to unlock this 20% discount on the subscription plan. To unlock this 20% discount on the subscription plan, which referral code, students? CADS. So do let them know about the same. So as I told you, whether your friends or the colleagues or junior, whosoever are there, whether their attempt is November 2022, for that they can take up some fast track batches also, or for that matter May 23, November 23, for which we already have the regular batches as well. So therefore those batches can be connected, or even as late as May 24, November 24, as the case may be. So all that you can just tell them to take up the subscription and definitely take up the benefit. With that, students, I'll see you tomorrow. Take care. Bye-bye.